This evening we are privileged to have with us Christine Turpin-Patton, who's one of the wonderful loan officers at Primary Residential Mortgage. Isn't that right? Yes. Make sure we get it correct. Glad to have you with us.
Thank you.
Yes, we're so glad to have you. Well, you know, it's always interesting to me because I have a kind of a passion in this direction anyway. Christine, tell us a little bit about what's going on with the mortgage market as we start a brand new year.
Okay, I sure will. I think what's exciting, the most exciting, is that it is truly now a buyer's market. So, you know, buyers have a lot more choices. There are more houses on the market. Sellers are more willing to negotiate. Sellers will actually, you know, consider a contingent offer. So, you know, the arena is really set up for the buyer to succeed.
You know, for some folks, they may not know what a contingent offer is. Why don't you tell them, what does it mean to have a contingent offer?
What it means is that you haven't sold your existing house yet. You're going to, you know, so you're going to do it contingent upon your house selling.
Right. And in years gone by, I've done that, but that is something that during a hot market, it's hard to do.
Exactly.
People don't want to take your contingency. They want somebody who's got it already done. But so that kind of speaks to the fact that it's moved more to a buyer's market, doesn't it? People are a little more flexible than they were.
And they'll negotiate. You know, you ask the seller for some things and you're most likely going to get them, you know.
Well, let's talk about the first-time home buyers, because those are the folks who, and we hear a lot about that, folks in their 20s and 30s are really trying to get into a home. What are some of the things available that are going on right now? Well,
I feel like we have the best first-time buyer program in the state, you know, compared to other states. So let me tell you a little bit about it. It does have income restrictions, but what's nice is they keep raising them. So how it works is we have a mortgage that is a third mortgage. It's $10,000, 0% interest. It is repayable over 15 years. The payment's $55. But who doesn't want $10,000, 0% interest? So we use that for a down payment, and then we use a second mortgage for the closing costs. So we can get a first-time buyer in very inexpensively. You know, I'd say they have to have money for earnest. That earnest money is money that you give the title company. The seller wants to know you have some skin in the game once you're under contract. And that's usually $500 to $1,000. And then we do charge for the appraisal up front. That's like in the 700s. And you usually, of course, have inspections. But both inspections and the appraisal can be put on a credit card. So again, you can get in with very minimal money in the bank.
So $2,000 to $4,000 realistically, if earnest money and some of the things that you're going to do with inspections, and you could get into a home. Now, of course,
even way less than that. So yes, okay. So usually $500 to $1,000 for earnest money.
Okay.
And then if you choose to put the cash, I mean, it's another maybe $1,500 at most for the appraisal and the inspection, so $2,500.
Okay, and you said that the $10,000 loan for some of the things that were a part of that is 0%. Right?
Correct. The $10,000 0% interest, that specifically has to be used for the down payment. Okay. And then we'll do a second mortgage for the closing costs, and that's how we're able to get people in with very minimal.
So that's a new program for first-time home buyers, and like you said, there's probably some sort of cap on how much you're making, so as a household as well. Now, we always hear the terms of Freddie and Fannie, and hey, what are Freddie? Who in the world are Freddie and Fannie? Tell us a little bit about them.
Well, they're private entities, but they are governed by Congress, and so they hold mortgages. And what's changed, and what you're hearing a lot of buzz about right now, is that President Trump raised the limit of mortgage-backed securities that they can hold, and he raised it to $450 billion. So what that means is that they can take more mortgage-backed securities from the banks and hold them in their portfolio, and that frees up the other lenders to provide more loans. Overall, it's probably, when they're all said and done and what they're going to purchase, we're probably looking at an 1/8 to 0.375 of a reduction in interest rates is what we think it will cause. So it's not like shattering, but it's helpful.
Let's talk a little bit about interest rates. They move around all the time, but you can just kind of give us an overall view as to where are they in the ranges these days? What's it for, especially like a 30-year mortgage?
Yeah,
right?
so 30-year mortgage, I'd say we're in about the 6.375 range. It is, of course, dependent upon your credit score, your loan to value, but this is a far cry from where we were. Last year we pushed almost to 8%. So interest rates are really in a great place. That first-time buyer program, 5.75% for one of the programs and 6% for the other. But you can see overall, our rates are good. And it is a prime time for buyers.
Okay, now let's talk a little bit more about, what interest rates, because I think most people, that's the thing you keep hearing kicked around in the news. What's going to happen with the interest rates? What's going to happen at the Federal Reserve? Are they going to go down? Are they going to stay where they are? Are they going to go up? Now, nobody knows for sure. Now, we're just going to say that nobody knows for sure what will happen. It's impossible. But you kind of get a feeling, a read of what's going on. What is your sense of some of the pressures one way or the other?
So, President Trump, if he had it his way, would have those rates lowered. He's tried to put a lot of pressure on,
Jerome Powell to push him down.
Thank you. Yes, exactly. But he doesn't have to do. He doesn't have to do what he's asked to do. He runs his own show. So, but now, and this just happened last week. President Trump has nominated Mr. Warsh, and he has to go through a Senate approval. But everybody's excited about that nomination. Now, that the changing the guards won't happen until mid-May. But with that, and of course, then the raising of Fannie and Freddie's holdings, and we do have a president that wants to have these interest rates lowered. So we are optimistic.
And so that could impact affordability just in general. I mean, it certainly could impact mortgage rates, but that just might make everything a little, easier. It could affect car loans. It could affect your credit card. A lot of things that it would spill into and impact. So you've mentioned, Christine, that you think that it's a good time to buy if somebody has been looking at I think there seems to be a lot of pent up demand. People you haven't been seeing a lot of houses changing hands. You haven't seen as many signs in the neighborhoods over the course of the last probably year and a half. Do you think that as the weather warms, because typically it's Marchish, April, as people start to think about getting out of school and maybe moving, do you think that this year could be different? What's your thought? Yeah,
I mean, we're projected to have a slight increase over, what we did last year. But I think the important thing is that right this minute is the optimal time for a buyer, because you do want to buy when it is a buyer's market. If we get to the rates and they're in the 5%, there is going to be all that pent up demand. Yeah. Thank you. And then you're going to be competing against 6 or 7 other people. So right now is a beautiful time to buy. And then I want to preface this by saying that we at PRMI waive our underwriting and our processing fee on refinances. Okay, so you've heard the saying maybe, marry the house and date the rate. We do think this will be a temporary thing, but we do feel like now's the time to get in. So get whatever interest rate it is, but not be competing against all these people for the house. And then when the rates are, such that it's a good time to refinance, the refi rates or costs will be minimal because, we're helping you out considerably with that. And, we get discounts at title. So a refi is very minimal costs. And that's that could be a big deal. If you had a mortgage that was at 8% and it gets down to around 6%. I remember the old rule of thumb. I don't know what it is all the time. It's probably changing. It used to be if it was about 1.5% to 2%, that was a good time to really start thinking, hey, if it's that much lower, I'm probably going to be better off to refinance. So if folks would like to get in touch with you at Primary Residential Mortgage, what's the best way to do that? Is it to go to your website or to give you a call? How can they find out more? I prefer a call. I feel like too much can be lost in emails and all that. So I feel like the best thing to do is just call me at 505-235-0688.
All right, so that information is there for you on the screen. Give Christine Turpin-Patton a call and she can tell you more about what's taking place with mortgage loans. Thank you so much for sharing with us.
Yes, thank you for having me.